Good evening, everybody. Welcome to Sniper Sundays. I hope you're all well and had a great weekend. I hope you're ready to get stuck into a new week. Last week was fairly slow in the market, but yeah, I've analysed the market, which I'm going to go through with you in a second, and it looks quite juicy next week, especially with that late move in the market on Friday, putting some movement into the market. But I'll go over all of that quite shortly. So first off, I just want to start off with some exciting news. I've spoken about the first official BD Forex event. You guys may have seen I've done one recently just while I was on holiday, but this is the first actual official event. What I've got in front of me is the BD Forex website, as you guys are aware of. And if you just go to the website and go to events, what you will see, if my internet, oh sorry, I didn't press it. What you'll see is the events page for the first ever BD Forex event. Now, what this is going to be is a community meetup. First one in London, hence the backdrop of London. Because BD Forex is based in London, the first one we're going to do is in London. And like I explained before, what this is going to be is an opportunity for members and the community to meet myself, spend a day, an afternoon with myself, talking about trading and discussing, having some live question and answers and market insights. But then also one of the main reasons behind having a meetup in each sort of city and countries and so on is because I want to make a community and get you guys to be able to meet each other, so you can actually get to know each other, bounce ideas off each other, and so on. So if you're not from London, do not worry, as there's plenty more events coming soon. So what I'm striving for is for every member to meet people within your own area, to then make a community. So as I said, this is the first one in London, but there's plenty more coming. So as you can see here, the first BD Forex event, our community meetup, will take place in London. Join myself and fellow community members for an afternoon of trading, discussions and market insights. And as I said, if you're not from London, don't worry, we'll be coming to a city near you soon. So please reserve your place if you're from London. This is going to be mid-October. So once you RSVP, I will actually get back to you with more details. But if you're available mid-October and you want to come, then please leave your details. As you can see here, your name, email address, your order number, your verification code, and your phone number. The sign-up closes at 9 o'clock next Sunday for the next Sniper Sundays. That will be the shut-off time. So if you can put your details in, and then we will get, as I said, we'll come back to you with more details. So that's the first event. Quite excited to meet you guys in London, and then over the next 2-3 weeks, I will also start let you know about the next event and where the next one's going to be held. So let's get over to the charts and talk about what has been happening this week. This is the economic calendar, but I'll get to that in a minute. Let's just start off with some of the charts. So this week, as we said, last week was quite a strange week in the market. Many of you may know, many of you might not know, that August can be a funny time to trade in the markets because it is the holiday season. If you think about banks, hedge funds, and so on, anyone like that who's trading the market, who actually moves the market, where the biggest volume of money comes into the market from hedge funds and banks and so on, millions and millions of dollars. Many of these people are on holiday in the month of August, so it is known for the market to slightly slow down. Now, the past few weeks before last week, the weeks before weren't too bad. We saw some movement in the market, but then last week we saw a very, very quiet week, one of the quietest weeks I've seen in a while. Now, as it was very quiet, I updated on Friday. I was scanning the markets, having a look for something to show up, but there wasn't really anything until right at the end, when, if you remember, during the day, as a bit of a joke, I said we need something like a tweet from Trump to get things moving. And then what happened? Friday afternoon in the UK, Trump decides to send out a few tweets, and the market went a bit crazy. So I'm going to start looking into that now. But saying that, we are now starting a new month, which is very, very important. So on each chart that I look over, I'm going to be looking at the monthly candle, as this is very, very important to understand what's happened last month and see how bullish or bearish the previous month is going into the next month. But also, one of the other important things is we are now in September. So we're now into the last quarter of the year. We've got September, October, November, December. So we're moving in towards the last quarter of the year. As explained, a lot of people are away on holidays in August and so on. Even, say, retail traders like ourselves, I'm sure many of you had a holiday in August and so on. But a lot of people get back, and from September onwards, really start getting their head down and start knuckling it down and getting back into trading. Same as hedge funds, same as banks and so on. Even, for instance, not really related too much, but if you think about Parliament in the UK, they're only going back to work. They've been off for a month of the whole of August, and they're only going back to work to start working on this whole Brexit situation this week. So you can see how globally August is more or less a month of holidays. So the market can slow down, but coming into now September, we'll see the market picking up. And personally, for myself, between September and to December is always my favourite time of the year to trade. Other times in the year, like January, February, can be quite slow just after Christmas, the New Year, and so on. And it's a bit stop-start because you have Easter and you have different things that come up. But I do find that September through to Christmas is my favourite time to trade, and you see a lot more volume and you see the best results. So I'm looking forward to the next 3-4 months. Now let's get on to some of the charts. So Euro-USD in front of me. As I said, as explained, we're going to start off with the monthly candle on each chart because the month has just ended. It's the 1st of September today. So let's have a look at the monthly candle on each chart. So what we can see here, last month, as I've explained before on Sniper Sundays, you don't really need to take into consideration too much of the price. We do look at this for our monthly key levels, which we have here, but we kind of want to look at what's happening more locally the last couple of months. This gives us a bit more of an idea of what's going to happen next, not what's happened back here. Apart from the support and resistance lines, as I said, but we have those set up. So now that we've had our monthly support and weekly levels set up, we want to look at price action that's happened a bit more recently. So last month we saw a big bearish candle, bearish engulfing on Euro-USD. We know that this has been in a bearish market for a long time, since back in 2018. So we've not really had much of a push up. We just can continue down, and continuing down. So last month was a bearish engulfing, and then the month of August we saw a push back up, and then we've seen a push all the way back down, and then on Friday that last little push back down to break through and will hit support and break through 1.100. Now this is quite an interesting level. New lows created that we haven't seen since back in 2017. So now we are at a weekly support level, which is going to be very interesting moving into next week. So let's drop down to the weekly chart. So once we got our monthly key levels, as I've explained before, then we drop down to the weekly. Weekly is we start looking at some trend lines to work out the direction of the market. So here we can see we've got this downtrend. So we had this trend line here. We had a false breakout some time ago, but you can see here we are coming down. So we can see just by a simple trend line, we can see the overall market is pushing down. Now, if we just zoom out quite far on the weekly chart, we can sort of see we've got this other trend line coming across here that we've also reacted off, a sort of like a bear flag, which we normally find on the lower time frames. So here we've got 0.1, 0.2, 0.3, and we're coming down to make a sort of 0.4 at the moment, but we haven't quite reached that. Then we've got 0.1, 0.2 of the trend line above. So what I'm looking out for, I'm keeping this in mind that we do have a little bit of room to push down to the downside here, seeing as we've got this sort of support line coming in underneath. Support and price 0.1, 0.2, 0.3. Can we come down and make a 0.4? So I'll delete that for the moment and just keep the charts clean. So, and I'll actually take this off as well because we know the trend is down. Now, looking at price, trying to figure out how it's been moving, what targets it's been trying to hit. What we can do is also look at Fibonacci and see the sort of how Fibonacci's played out on the weekly chart and the daily. So if I just show you here, actually on the next one of the next webinars, the educational webinars, I think I'm going to move. The next stage is going to be moving from trend lines over to Fibonacci. So I'll be explaining how Fibonacci works, the methodology behind each level and so on. So I'll go into that in more detail. But here we can see we kind of had a, we can see how we played out here. We've had the start, the last significant high, A, B, C retracement here to the 50%. We pushed down and we spiked and we've hit this sort of level here. We've hit our first extension of -27, broken through that and hit this level of 1.100. Now we do have this we have our second extension here, but I think that price could continue, given we had that big bearish day or week or last week. The price can continue and come down to sort of this region here. This also is in line with sort of this last push that I think we could come down to sort of see this area. So I'm going to be looking at for price to push down next week, continue this bearishness at the beginning of the week, and see if price can push down into sort of this level, where then it will become interesting to see whether we can actually sustain below here. If we do come down to this level, then if we break support, as you can see here, we know that we need to come back and retest as resistance. So we're looking at this coming back up to 1.10, and we may then start pushing higher if we have a weaker dollar. Now at the moment, the US dollar is very, very strong. We've seen a big push up on Friday, and I'll just bring this up now because it's very important to watch the US dollar index when trading Euro US dollar, because you can see how they almost have an inverse correlation. So here we can see on Friday, so I had my actual resistance across here, highlighted in yellow if you remember. I'll just move this away for the moment. And we were looking at price rejecting this level. But then on Friday, we saw this big push higher. It broke out, so that's on the weekly chart, just drop down to the daily. We can see here, we had this big push up higher, broke through resistance. We've come now up to retest this sort of former high here and create a double top. So interesting levels for the US dollar. Can we continue higher, or are we going to find weakness here and pull back down? The US dollar has been bullish for a long time. If you just look at this on a weekly chart, obviously we've had pullbacks and weakness at times, but in overall we've had high highs, high lows, high highs, high lows, high highs, high lows, and now we've just made a higher high. As you can see, we've just pipped just above the previous high here. So I'm watching this now to see whether this can actually push up higher. I'm looking at possibly if we could push higher, there's an opportunity for coming up a couple of hundred pips. But at the moment, if I just drop down to the daily, we can see that we are forming a double top. So this is going to be very, very interesting to watch on market open and see how we act on Monday. Given that we had this really big bullish push at the end of the day on Friday, what we want to see when market opens is, can we sustain that little push from Friday, or are we going to see rejection from these levels with this double top? So I'm going to be watching carefully. You can see here we've already spiked against it, having a little bit of a pullback, but it's very early or too soon to have a look and say where this can go. So we have to wait for the market to open on Sunday evening and let it settle on Monday to see what exactly is going to happen from what's happened over the weekend, and see how the market reacts. Now also, what we have to take into consideration is, we know how much Trump and the China and the US tariff war has affected the market. Now, as of Sunday evening, the tariffs against the imports for the US and China that Trump's put in place actually come into place on Sunday. So, and vice versa, some of the tariffs that China had placed on the US imports also come into place on Sunday. Now, it gets quite complicated. A lot of this has been a lot of products that the tariffs are going to be on got pushed back till December, but there is quite a lot of, say, household goods that will have tariffs and put onto them from this evening. So we need to see how, now that that's going ahead, if there's how the market is aware of this, but seeing how this reacts this week. There's a lot of fundamentals out there out there at the moment that can change the dollar, can change gold, can change oil at any time. So you have to be kind of very vigilant of the news and the fundamentals at all times. So what I'm explaining is that at the moment we're seeing a big push up on the US dollar, but we need to see what the fundamentals are saying next week to see whether this is going to be able to push up higher, or whether the US dollar is going to suddenly start to retrace and find some weakness. Now, I do think that we're going to push up a little bit higher. I do think we could come up to around 19. Well, let me just highlight. I think around to these levels, maybe 99.50 at a push. If we are going to pull back, I do think we're going to have at least a little push higher, maybe early in the week, before we see a bit of a pullback. But that's an interesting one to watch out for. Now, seeing that, relaying back to Euro US dollar, if we do see a little push at the start of the week, then we may see Euro US dollar push down lower as well. Then when we get down to here, if the US dollar is going to weaken, then we're going to see Euro US dollar push up. But it all depends on how the US dollar is going to behave. So short term, when the market opens, I am going to be looking at price pushing down. Again, I might have to update and change this quite early, depending on how the market reacts. But at the moment, even though we've had this push down, we've had this bit of a pin bar, I would not jump in or get caught out trying to buy this straight away. Remember, Mondays are very temperamental in the market. Never just jump in and start taking trades straight away, because we need to let the market settle. So now that we're back below, now that we're not back below, but now that we're below the weekly support of 1.10, there is room for more downside with Euro USD. So at the moment, as I said, Friday we had a little pull up right at the end of the day. Let's just have a look at what the 4-hour Fibonacci is saying. We've hit the first Fibonacci extension, a little bit more room to the downside. But on the bigger picture, I do think that we could push down a little bit lower. Just try and drive through this support a little bit more. Come down, test the waters below here a little bit more, see a bit more rejection, and then we can possibly look at looking at a long trade. But as always, when we have a big move like this, I'm looking for more rejections before we look at taking a trade. We want maybe the 3 drive to the downside, some formation of some sort. But at the moment, there's no sign of a buy of taking a long trade here, even though we're at weekly support. We're very bearish at the moment, so I'm going to keep an eye on this and just see how we fare out at the start of the week. But at the moment, Euro US dollar, looking for this to come a little bit lower. And when we get down to sort of these regions of around 109.50 and 109.100, then it's going to be interesting. So I'm going to be looking at around those sort of levels for price to come down to first. If we can see a little bit of a pullback, if we do see Euro USD push down, but first we see a little bit of a pullback higher, which you can see at the start of the market open, there may be a nice short opportunity coming in to come down. But I'll have a look at that and see as the market opens. But in general, on a plan for the week, I'm looking for a price to try and push down a little bit lower and see if we find support a little bit lower down. Euro GBP, as I said, monthly candlestick. We can see here we've had a very, very, very bearish month. Now, my Euro GBP, you can see my levels are a little bit different. It reacts very well off these 200 levels, so every 100, 0.900, 0.9192. So I've got them marked out, so it's a little bit more more on the screen at the moment. But here we can see big monthly candlestick, big rejection of 0.9300, retraced all the way down to about 0.900. So nearly about 300 pip reversal from here. So creating a double top here. Now, if you think back, this is what I was saying at the time. Even though the Euro GBP was looking majorly bullish here, you have to take technicals into consideration and sometimes just look at what you see on the chart. You can see here that even though we're reaching the double top and it looked very, very bullish, we know that price is going to react of these historical figures and these historical previous highs and lows and supports and resistance. So We have to have faith in the technicals. So when we're looking at short trades, which we took, we see now we've got nearly 300 pips. So I think if anyone is still holding that trade, it's about 250, about 250 pips in profit. Now we drop down to the weekly chart on Euro GBP. What's quite interesting here, and what I was looking at earlier, is that if we look at this on a weekly chart, we can see that this was one big bullish move on the weekly chart. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 bullish weeks. Now we're having a pullback, but this is also considered as a retracement. Now, if we take the Fibonacci from here and actually put it on this, just to see how much of a retrace, how much the weekly move has retraced. So at the moment, this one big weekly move that we see here, we've retraced nearly to the 38%. We haven't quite made it, but we're pulling back down to the 38.2% retracement level. We can see here just underneath how well the 50% is lining up with 0.900. And we can always see this, the one that we like the most, the 61.8%, is lining up with 0.8800. So we can see here that there is potential on the weekly for this to pull down to this 38 to complete that, to at least come to a 38.2% retracement, perhaps the 50 or the 60, or 61, sorry. So keeping that in mind, we know that the Fibonacci we haven't had a retracement yet, that we still haven't actually made the 38.2. So I do believe that we'll at least come down and hit that level, if not the 0.900 that I was explaining last week. Now, if I get rid of that Fibonacci, drop down to the daily chart, what we can see here, as explained, is we're very, very bullish at the moment. We were looking at the trend line breakout last week, and price got quite choppy around here, so we haven't entered a long trade or anything yet. So we can see here price is tried to break out, we push back up higher, and we're sort of rolling over to the downside at the moment. Now we just adjust this because we did have that breakout, and we can see here that we're finding support once again. But we have to remember that we have a trend line coming across the top here now, because we are in a downtrend. So we can, last week I believe it was, we had a breakout of the daily trend to the upside, and then we spiked off 0.9100, retested it as a resistance, and pushed all the way back down. Then we have this sort of evening star formation. Just move this away. You can see it's 1, 2, 3. So it looks like price is going to roll over and push back down to the downside. But we do have this trend line now that we adjust to this last high made here, and we drop down to the 4-hour and see how price is reacting to these. So we've got this daily trend line here. As explained, we had this daily trend line coming from the bottom, but like I showed you in the webinar, once we break out, make a new low, we adjust that level and we adjust it to the last low. So now you can see that price is trying to sort of break out of this level. So it's quite interesting here, quite an interesting level, as well as GBP USD because of the pound at the moment. So we can see here we've got this support level coming across that we're finding support at the moment. We're having this sort of fake out that it looks like at the moment, or attempting to break out. So we may find some support here, but given that we got the weight of the bears on us at the moment, and it's been pushing down quite strongly, I do see another push to come down to this sort of weekly support level of 0.900. If we look at the Fibonacci here, we just line this up, we can see we came down, we had B here, came up, retraced to the 61.8% and the 0.9100, and now we have got more downside to come down to sort of fulfill these Fibonacci levels. So keeping an eye on that. I do think that this support level can break and we can come down to 0.900. I see this coming down lower if we have more pound strength, if the pound can find strength, but temporarily we might see some pound weakness, as we saw some weakness on Friday, so we may see another little push back up. But at the moment, while we're trading below this daily trend line here, as you can see, I'm just standing aside on this. I want to see a little bit more from Euro GBP in order to look at taking long trades. Even though we have this nice inverse head and shoulders sort of lining up at the moment, I want to see price develop around this sort of level first, and then we can look at maybe possibly taking trades. So I'm going to watch this, going to see how price consolidates around this zone. but we do know that we do have this support level sitting just below us, and we can push down, see further weakness here, and come down and tap that. So I'm keeping an eye on it here. I am keeping an eye on this sort of highlighted level that I'm looking at the moment, seeing as we have we can identify this as a breakout candle at the moment. Currently we're failing to break out on the next candle, but it's very early in the week, so we need to keep an eye on this and watch out. So let's go to, I'm going to quickly go to pound, GBP USD, seeing as we're talking about Euro GBP because it's heavily involved with the pound. So here what we see is GBP USD. We've been watching this, monitoring this for a little while last week. So initially we've been long, but here we had the trend line 0.1, 0.2, came up and tapped it for 0.3, and we're currently pulling back. Now, that's all fairly straightforward and quite simple. If I drop down to the 4-hour chart, now let's just talk about that trade on Friday, which happened very, very quickly. So 4-hour chart, we've got this counter trend line coming across here, 0.1, 0.2, 0.3. We haven't quite reached that yet, but we know that that the price likes trend lines, likes to bounce off them and use them as support to make a move. So I highlighted that while price was trading up around sort of these levels last week, I was looking at possibly taking a long trade from here. But first I wanted to see if price could come down and sort of tap this third touch on the trend line here. Now, while we were waiting for that, we did see a bit of a bullish move here on Friday, but the market was very, very, very choppy all week. There was a few trades actually that I was looking at us taking on Friday, but because of the market conditions, we didn't get into them. So one of them was GBP USD, and we can see that that worked out, just standing aside. I was looking at taking long trades here, because I do think eventually that GBP USD can come up and push up higher. But currently, what we can see on Friday, and this is a good thing to watch and learn, to look at trades, taking trades and identifying when to take them, is that, let me just move this, even though overall we're looking at GBP USD coming up higher at the moment, what you have to remember is different time frames and different market structure. So what I mean by that is 4-hour, we can see we're making higher highs, higher lows, higher high, higher lows. And at the moment, 4-hour, we're bullish, we're pushing up higher. Even though we're pulling down at the moment, we are still in an uptrend. And we drop down to the 1 hour, we can see that on the 1 hour time frame, they were actually quite bearish. So if we take a trend line across here, like I did on Friday, and we can see here that we got 0.1, 0.2, 0.2 here, and then price is coming down, making lower lows, lower highs, made an equal sort of low here, and came back up, but more importantly, making lower highs. So we've got a lower high here, a lower high here, and we came up, hit this trend line, and made a lower high. Now what we can see here, price was just pushing up into this sort of resistance level area here, and that was one of the reasons why I looked at taking a short trade. I could identify that we were making a lower high here, but then if we drop down to the lower time frames, something that we see a lot here, these 3 candles, 1, 2, 3, that lovely evening star formation on the lower time frame. Then that 15-minute candlestick was very, very bearish as well, so it engulfed the previous 2 candles. So we could see that the momentum was on to take that short trade. Go to the 30-minute chart, then the next 15 minutes this can just continue to push down lower, and then we just continue to roll over, roll over, roll over. But it was dangerous to take a short trade once the biggest move had happened, in case we had a big pullback up due to the market conditions. But that was the reasoning behind looking at that short trade on Friday. Now, as explained, when I pull it out, I said I'm watching this to come down and sort of tap this trend line here, and we're nearly at that trend line now. So I'm going to be watching this on market open and on Monday and seeing how price reacts around this sort of level here. If I just go back to what I was showing you last week about the Fibonacci, we've had this 61.8% retracement. We've had 1 tap, 2 tap, and now we're having that 3rd tap. So I'm watching this on market open, going to see how the market reacts. But this sort of area is interesting. But I'm going to be looking out for all around here to see how price develops and how it acts. Remember, nothing is 100%, and we can see some support here, but the pound being very temperamental, we could see this actually just push back down to the downside. So for the moment, my bias is to look for long trades around this level, and I will update on that. So and that is basically what I'm looking out for GBP USD at the moment. You can see here on the daily, we've pushed up, have found resistance on there, and also I will actually go to the monthly chart to have a look at this as well. Let me just clear this off for you. So you can see here, give us a slight indication that we could have some upside movement on GBP USD. You can see we've been very, very bearish on GBP USD for a long, long time. We've now pushed down, and we've had, after this big bearish candle here, going through hundreds and hundreds of pips, we've had this doji candle. Doji candle means indecision in the market. It means that price is slowing down after a move. So we've seen this big bearish move, and then we've seen this doji candle, which means price is slowing down. So that now maybe the bears are running out of steam, and the bulls might come in and start pushing this back up. So I am looking at, if you can imagine, the next monthly candle could be a morning star formation. So I am looking at the possibility of this pushing up higher. Go down to the weekly, you can see that we found resistance at the weekly resistance of 1.2250. We push back up, pull back down as we would expect it to. But we just go down to the daily chart, and let me just put on Fibonacci from here. You can see that price lines up quite nicely. We even have this sort of overall daily Fibonacci. I have taken mine from here, but I'm just keeping an eye on this. We do have this one as well. We can see the 61.8% lines up perfectly with 1.2500. But I am taking it from here, the last significant low at the moment. And what we can see here is we've got price lines up here. And the first Fibonacci extension, is our target level. You can see how this lines up nicely with this sort of support region out here. So we'll just take this away. You can see that this level here, if we can find some nice support from around here, we may see a nice long trade pushing up to around the 1.2350 level. Also, remember what I explained about finding monthly and weekly levels. This is my monthly level, this is my weekly level. Now you can also use the Fibonacci or just calculate it to find the daily level in between these two. So I need to just adjust that. But let me just adjust this. So the Fibonacci will find you if you put a line on the 50% here, you'll find you the halfway point between two. This is now my daily level. So you can see here, this resistance lines up quite nicely. If I drop down to the 4 hour now, I'll put my Fibonacci on. You can see how perfect that looks. For you guys who know a bit more about Fibonacci, but I'll explain it on the next webinar, you can see here that lines up perfect with this form of resistance. So this is a nice sort of a nice level to look for a target. If we can find and make sure we find some support around this level, we can look for nice long trades on GBP USD. It's also possible, what we've seen before in GBP pairs quite a few times on GBP JPY and so on, is that we might have that sort of fake breakout or that fake out to the downside around these levels. So I'm going to be watching out for that. But while we trade above this counter trend line, I do think that we still have more room to the upside for GBP USD before we have another move down, if any. Similar with GBP JPY. So GBP JPY, this is a monthly key level here. I've just cleared it off to make it a bit more easier to see. But if we just go to the monthly, you can see here on the monthly, we've had this really big rejection from around this 1.2750 level. We've had this big rejection, dropped down to the weekly, we pulled back, and this just shows you how key levels work and why it's good to have them on your chart just so you can understand market structure, because market sort of moves in steps and ranges. So you can see here we come down, found support at 1.27, pulled back up, hit 130 once, twice. Looks like it's rolling over to the downside, but at the moment we're seeing two doji candles here. So it just means the market's indecisive, doesn't know where it's going to go next. Drop down to the daily, you can see prices pushing down, but currently we are still, until now, we are still sort of being supported by this counter trend line. So I'm going to be watching this next week. I'm going to be watching this next week and see how price reacts around this counter trend line, whether we can manage to break it, or whether we find support here once again, and the pound, if the pound gains strength, we may be able to push higher and through this 130 level. So I'm going to be watching for that. Japanese yen is something to watch though. If that gains strength, this could push down. It also depends on gold and how gold reacts, which we'll come to shortly. USD CAD. Now this is something that I was actually watching out for on Friday. A few of you actually took this trade, so well done. People that have been in the group for a couple of months. Now, if we just look at USD CAD on the monthly chart here. Last month was 2 months ago was bullish, and all of last month ended up finishing as bullish. Now, I've been explaining that if we drop down to the weekly chart on USD CAD, you can see that we are quite bullish. You see here 1, 2, 3, 4, 5, 6, 7. Not the strongest candles in the world with this sort of doji, bit of shooting star doji here, but nevertheless they are finishing bullish. Now we broke above 1.32500, and ever since then we've still been trading above it. We've had last week, 2 weeks ago was a doji candle, and then last week we came down, tested that support level, and then pushed all the way back up, sort of a pin bar, but a bit of a doji as well. So a bit again showing indecision in the market. If we drop down to the daily chart, what we can see here, and what I keep expressing, is that we are still technically in an uptrend. So you see here we've got lower, higher low, we've got a higher low, higher low, higher low, and a new higher low. So price has been pushing up, we're in an uptrend, but price has been sort of stuck in this 100 pip range here for USD CAD for a good couple of weeks. Now, when price came down to here last week, the reason I was looking at this on Friday, but the only reason is because, as always, it's all about risk management. Friday evening isn't the best time to get into a trade, because if you're not out of it at the weekend and you're not in good profit, you're leaving yourself exposed for the market to gap or open up against you. So we have to think about risk before we think about reward at all times. That's very, very, very important. Now, looking at this trade, I can see that there was an opportunity for it to go up. But again, if it didn't move enough, it could mean that we might have been 10, 20 pips in profit, but that's not good enough for us just before the market closed on Friday afternoon. So what I was looking at here, if I drop down to the 4 hour actually, again, based off what I showed you on the webinar, is we can see here we've got this 4 hour trend. 4 hour trend here. So we had the fake out earlier in the week. I believe this was earlier in the week. We've had that fake out. We found support at the bottom of this range and 1.3250. And so then when we have a fake out, what do? We adjust the trend line to that low. So we adjust the trend line to that low. We be patient. And then what we can see on Friday is 0.1, 0.1, 0.2, and then we had 0.3. So like I explained before, guys, obviously I give you my setups, but this is all about learning and taking what I'm teaching you, adapting it to your own trading and taking trades. So when every morning call, every evening call, I cover 10 to 12 pairs along with oil and gold. I won't be updated on all of those pairs on a daily basis. So when I give you my market bias, you can then use that with your own trading, apply everything that I'm teaching you, use it with your own trading, and then take the trades. So for instance, with this one, as I said, it's up to each person's own risk appetite. But here, this is what I was watching, and this is just something to learn about for future trades. So here, we came down, and I can see we were having this third touch of the trend line, even though we had some Canadian news, which is why we had this push down here. We had this Canadian news. If we drop down to the 1 hour chart, you can see here on the 1 hour we had this nice, really, really nice tweezer bottom rejection of this support. If we go down to the 30 minute, you see it looked even better. And on the 15 minute, we had this sort of double bottom, had this pin bar, this bullish engulfing. So as you know, when you're trying to add confluence in, you start from the 15 minute chart. You can see we've had this spike. So it's sort of tweezer bottom. Then we had this bullish engulfing. 30 minute chart, nice bullish engulfing. Sorry, not bullish engulfing, but nice bullish candle here. Pin bar, finished very bullish. And then on the 1 hour, you can see here we had a nice bullish candle as well. Then we took off and pushed up to the upside. We now have an evening star formation here, whereas where before the market close, you should take your profit. So that's something that I was looking at last week. But this little finish on the week just shows you that the market, this pair is sort of indecisive of where it wants to go next. It does have that potential to come up higher and tap to take out the highs here before making a move lower. And like I explained many times before a bigger move, there's usually a last false move in the opposite direction. So I do think that if we were to start moving down the USD CAD, then we're going to come up and tap this 61.8% level first, sitting just above. So I am expecting USD CAD to push up higher. Once we break up higher and break out of this range, we'll see where we can go from there. We may even have a short-term trade on because, again, as explained, when we're in a consolidation zone like this, and for so long, when we do break out, price breaks out violently. So we can see a breakout here, and then we could even see a trade all the way up to 1.32500. So an interesting one to look at on USD CAD this week. USD JPY, quite a tricky one last week. Looking for this pair to come down lower, but we're now actually back above the 10600 level. We just look at this on the monthly. You can see we've had this huge spike from the downside at the moment. So we're currently monitoring this one. We'll just drop to the 4 hour. We broke above 10600. I'm going to see how we react if we come back and retest 10600 again. If we come back down, you can see here, we've got this sort of counter trend line here. We're trying to break out at the moment. If we come back down and find support around 10600 again, I may actually be looking at taking some long trades on this. But again, this depends on what gold is doing at the moment. But we can see here, we're quite choppy on USD JPY. It's a bit hard to read. So as always, let's not make life harder for ourselves. Let's keep away from the choppy pairs and concentrate on things that are a bit more clear. At the moment, I want this to develop a bit more, see how price reacts if we break below 10600 again, or if we tap off this level, and I'll be watching for trades. Now, another thing is, guys, obviously last week was very, very quiet. There wasn't much happening. Definitely not the market for us swing traders, looking for hundreds of pips per trade, because most pairs were only moving between 20 and 30 pips per day. In any case, that's not market conditions to trade, because as I said before, risk reward, there is no risk reward there. If a pair is only moving by 30 pips, which you saw with Euro USD, there was one day that it literally only moved 20 pips or 30 pips. If a pair is doing that, then there's no risk reward, because you're risking however 10, 20 pips to get maybe 10, 20 pips, and in market conditions like that, it's too risky. So we stay away from it. But if we start to see moves a bit bigger than that, 50, 100 pips, but not much more, then we can start looking at some more intraday trades next week, so that we can catch these little moves and then before these bigger moves happen. But given that we had a big move on Friday, I do see the market getting back to normal from tomorrow. So USD JPY I'm standing away from at the moment. Now NZD USD, an interesting one. We are at, we're very, very bearish on the monthly previous month. This blue, I haven't highlighted this blue, this support, just to keep it clean, but this is a monthly support level. So you can see here we're having a big, big, big push down. We can see here on the monthly that we do have some support levels around here that we could push down to. But currently we're looking very, very bearish. So if we drop down to the weekly chart, again, we're looking bearish. We've not had any bullish week with 1, 2, 3, 4, 5, 6. We were seeing some support around this monthly support level. Looked like we might have a little rally to the upside, but it's been sort of short-lived. Now, on Friday we had this doji candle off support, but again, at the moment I'm going to stand aside on this and wait. I am going to be looking at New Zealand dollar and Aussie dollar a lot at the start of this week, because we have Aussie dollar news coming out. So I will be watching that early in the week and seeing if we can find any sort of price action that shows that we might find some sort of a reversal from here. On the 4 hour chart on Friday, we finished quite strong with a nice bullish candle to finish back above that 0.6300. But currently, this is way too messy to get involved in. We drop down to the 1 hour. You see here, we've got a sort of little range here that I'll be watching and keeping an eye on. At the moment, we're still pushing down, pushing down, pushing down. I'm looking for New Zealand dollar to sort of have a bit more of a push to the downside. possibly first earlier in the week. We come down a little bit lower, we would break out this level. I will then look at previous support levels as I showed you on the weekly, see if we can come down to sort of these regions here. But at the moment it's choppy and messy. Keeping an eye on it, but not looking to get involved anytime very soon, as soon as the market opens. But possibly later on Monday and Tuesday we might start getting involved with this pair. But while we're within this sort of range here, I'm going to stand aside and just let price play out a little bit. You can see here we could come back up, retest the top of this range and top of this resistance and this trend line. We might see another push to the downside to make a new lower low. However, if we push up above, then I'll be looking for a pullback, and that's where we might look at taking an entry to go higher. So just watching, let this one develop, don't force a trade. Things were a bit messy last week. We've had a bit of a push on Friday that's given us some direction. So hopefully that will continue this week and we can get some trades. But remember, we have to remember that last week was very quiet and very choppy. So we have to remember that coming into this week and just make sure that those market conditions are gone before we start taking trades. Aussie dollar monthly found support at 0.6700. We've dropped down to the weekly. We can see that we had this nice double bottom of support here. So we have shown that we are rejecting this level. Drop down to the daily. We can see that we're just kind of hovering around this monthly support level. We'll go to the weekly economic calendar. We got some news coming out on Monday from China. Tuesday we have Australian news, lots of Australian news. 2 o'clock in the morning UK time, retail sales, cash rate, the bank rate statement. Then I think on Wednesday we also have GDP news. So we've got a lot of Aussie dollar news. So I'm going to be watching out for how the Aussie dollar acts early in the week. We may have another little push to the downside. And then from here we could possibly look at maybe taking a long trade. But depending on the news, I'm going to be watching out for early sort of price action. Because what you can often see is some signs coming in. When there's news coming out, you can often see some signs in price action first prior to the news event. It gives us an idea of where price can be moving. You can see here on the 4 hour, we've got this little inverse head and shoulders here. Left shoulder, head, right shoulder. But again, it's too soon to look at taking anything on Aussie dollar. And I will be just monitoring it around these sort of levels here and seeing if we can have another push down before looking at taking any trades. Now remember, also, I've mentioned many times, free drive to the downside, or when we make lows like this, we often break those lows before having a reversal, if any. So Aussie dollar is interesting to me, given the fact that we have got lots of Aussie news coming out. The USD CAD, and also I'll be updating GBP CAD, is interesting to me this week because we've got Canadian news coming out as well. On Wednesday, we've got the bank rate statement and overnight rate coming out. And then, do we have any on Friday? The Friday we have employment change, unemployment rate, and then the big one of the month is the non-farm payroll. The first Friday of every month, the biggest data release from the US, which is about the employment change, unemployment rate, and also then we've got the head Mr. Powell speaking from the Fed. So there's going to be lots and lots happening on Friday. So quite a busy week coming up in the market. Let me just go back to Tuesday. I don't think I showed you that. Yeah, with Aussie news, some USD news, but Monday's quite relatively quiet. So Euro US dollar, expect big movement during the week and then on Friday because of non-farm payroll, and it's going to be very interesting for the US dollar and how that reacts, and how that news on Friday is going to make a difference to how the US dollar is and the strength of the US dollar. So it's going to be very interesting week for the US dollar. So this is sort of our main focus. So I said Aussie dollar coming down, looking at it possibly finding support around these sort of levels, and then gold. What I'm looking out for in gold. So if we just remember 2 weeks ago, guys, I explained when we were just above the 1500 level that I was expecting this to come up to 1550. Now, just simply for a learning basis for yourself, this is why looking at the bigger picture, looking right out on the weekly chart, why this helps. So where we could get this 1550 level from was, you can see from my support and resistance, we got 1350, 1400, 1450, 1500. So the next was going to be 1550. We lined it up with historical data. We can see here support, support, support. We knew that price would be sort of drawn to pull into these levels, seeing as we've got such strong support from here before. If the market was going to start turning, we were going to come up and find resistance from around that level. Now, let's just have a look at this on a monthly. Still very, very bullish. Very, very, very bullish monthly candle. Even though we drop down to the weekly, we have seen this shooting star on a weekly chart. So you can see here we have this shooting star. So showing some bearishness, showing that we might pull back a little bit. If I drop down to the daily chart, however, what we have to still understand is that we are in a bull market. So obviously, given whatever happens with the US-China tensions and so on, we can still see a lot of movement on gold to the upside. So you can see here we're clearly in a bull trade, pushing up high, making new higher lows, higher highs, higher lows, higher high, higher lows. So we know market structure, we're still bullish at the moment. On the daily chart, take the simple trend line on the daily, pull it across. You can see that price is currently just trying to break out of this daily trend. But remember market structure, higher highs, higher lows, higher highs. We could be just making a new higher low before having that next push up higher. Drop down to the 4-hour chart. What's quite interesting here is price is pulling back down to this level. Just put on a Fibonacci here. You can see we're pulling back down. We have pulled back down to that 61.8% retracement level. So monitoring price action here. Though gold looks quite bearish at the moment, we might find some support around here where we could be looking at potential a reversal from this level to actually ping back up and take out that 1570 level, which I explained we were looking at last week. So I am watching out for that in gold. It's quite interesting. If we do see a push up on gold, we'll see USD JPY push down lower, as I was explaining last week. So that's quite interesting. So there's a few things that we have to wait for market open and to see how the market reacts, to let the dust settle on Monday before we can start taking trades. But there's quite a few things lining up now to look for good trades next week. Gold is interesting. We've got GBP USD, Euro GBP, Euro USD. Quite a few trades. USD CAD is an interesting one next week, given lots of USD news and Canadian news coming out. And these ones, New Zealand dollar and Aussie dollar, around these levels are interesting as well. So we're sort of getting to levels where we can look like we're getting into areas where we can take these swing trades and hold them for 2, 3, 4, 500 pips, as we've done many times before. Just mentioning that Euro without hundreds of pips, I just remembered Euro AUD here, which I don't think we covered. I'll just throw this on, even though this is quite a long episode. What we can see here, I'll just clear this off. Just reminded me, because we've done really well on Euro AUD, talk about hundreds of pips. So monthly, we can see huge rejection on a monthly. Huge rejection. As you can see here, what I've mentioned quite a few times is if we're going to have a reversal, we often see a last push up and a break of resistance before reversing. So you can see here this sort of resistance level here. You see how price is now spiked above the previous 2 monthly resistance, and now we're having a sharp pull down to the downside. Drop down to the weekly. Just quite simply, we had a trend line on here some time ago, and we had 1.1, 0.2, and we took a long trade from there, and we had that 1,000 pip move to the upside. Now I'm going to get rid of that. We are still from that point. From this point here, we are quite bullish. We are seeing a bit of a pullback here. Very bearish week here. Very bearish week that we've seen here last week. But we'll drop down to the daily chart. What I'm looking at here is we're finding some support at this level, prior support level. You can see here the market is starting to open. TradingView sometimes does this, so don't take any notice of this at the moment. But I'm going to be watching out how price reacts from this sort of level here. On the 4-hour, we can see here on Friday that we had this push down. And what we're looking at on Friday, again, another trade that I explained prior, I think on Friday morning's morning call, was we had this trend line coming down across here. And I was looking for price to come up and make a third touch, which we had here. See this doji candle, and we hit the top of this range that I highlighted as well. So we had two confluences for a short trade there, and a market pushed down. But until we had the tweet from Trump, we were still within this range. We have broken out this range now, and we've broken out violently, as I explained happens when we break out of ranges. And we're pushing down to the downside now. But I'm going to look at how this reacts from around here and this support. We might find support once more and have a little push up higher. And from here, we may actually then be able to look at taking a longer term short trade to come down. But I'm watching price here. I'm watching Australian dollar. Obviously, I'm watching for the Australian dollar to possibly find against the Aussie dollar against the US dollar to find support around these levels. But if the Aussie dollar is going to push down a little bit first on market open, or if the Australian dollar is going to get weaker, then we're going to see a little bit of a pullback here from that push down on Friday. So I'm watching out for Euro AED. It's an interesting one for me next week as well. Watching the Aussie dollar, Australian US dollar. So if we see some strength in this and the bulls come in to start pushing this back up, we could see this Euro AED push down quite a lot lower. We have had that bearish day on Friday. We could break this. We could come back and break below 1.6250 and long term come back down to 1.600. If I just took on this daily Fibonacci, you can see here A, B at support here. C retracement to that 61.8%. You can see here our second target on the Fibonacci lines up perfectly, 1.600. So that's a long-term target. But we're watching price to see if we pull back up here early on market open and early next week. So lots to look out for. Quite a long sniper Sundays. Lots to look out for. And also, guys, what I'm going to be doing next week, as I mentioned before, we've got the educational webinars, which we do once a month, like where I showed you the trend line strategy. Next week, probably on Wednesday, what I'm going to do is the live streams that I explained about. So just jumping on a live stream, nice and chilled, nice and relaxed, just to have a chat with you guys, answer some questions, and go through some stuff. So think about some questions that you want to ask, and I'll get through as many questions. So that should be Wednesday evening, but I'll update with you on that. But apart from that, as I said, remember we have got the BDFX, the first BDFX event happening in mid-October. So if you're in or around London and want to come to that, please RSVP, put your details in here before next Sunday, and then we'll update you with more details and let you know about that. But as I explained, if you're not from London or anywhere near London, don't worry, we will be coming to a city near you very, very soon. So have a great evening, guys. Been a long Sniper Sundays, so it's going to take a little bit longer to upload. But yeah, let's be ready for market open, and let's be ready to jump on some trades on Monday. I'll speak to you soon. Have a good evening. Thank you.